Good evening, ladies and gentlemen. This is CrewSA Trading Frank. It's approximately 9:15 p.m. on February 21st, 2019. This is a important strategic update on markets and individual stocks tonight. Full disclosure, this is purely for financial education, not for any solicitation or advice. Session will be recorded, uploaded to the Google YouTube channel for viewing later by any members or anyone out there with the internet connection. Can always access our very resourceful and actionable forecast that we put out there. And that's available on the Google YouTube channel. All the videos that are available to the general public and are free are posted out there. Please also follow us on Instagram on the highlights of some of our trades that we do. That's purely for promotional purposes, and we would sincerely request that all of you do follow us there. We'd like to get the follower count up, which has been going up nicely, and pass on the word to your friends and colleagues so they can see a slice of what we do. On that note, let us begin. This is going to be a short one. There is not a heck of a lot to say. We all know what's going on with the markets. We all know what's going on with individual stocks. Everything is displayed in full view in actionable real-time content on Twitter. Excuse me. Somebody can just mute their mic, please. Thank you. Actionable content on a real-time basis that is provided for all members and free trial subscribers on the Twitter feed. So it's important that all of you, and I don't need to remind you guys that you at least review the action. I mean, all the market action and the precise analysis that's put out in place at the end of the day, if you guys are busy during the day. But for active, semi-active, and tactical traders, it's highly important that you go through the Twitter feed at least during the day when it's provided, but if not, then in the evening, so you're a little bit prepared of what is happening, what is going on, and what we are expecting to happen. So we have entered a point of slightly enhanced volatility. What that simply means in simple English is that the market is starting to reach those levels where we are hitting some major resistances. I talked about this months ago. In fact, I talked about this right after Christmas, the possibility that we would complete this very large pattern. And we are in the process of doing that. We have a little bit room to go. And I think at this point, it is, as I've explained in multiple videos and on my charts, that we have possibly another, drawing that up for you guys, somewhere another maybe 100 to 125 points that we can get up to. 28.19. We closed at 28. We closed at 27.72. So we are looking at, one second here, the final pattern completion. It never gets that exact, but just giving you guys an idea, this is a massive resistance right there, starting all the way back on October 17th of last year, right there. You can see that very clearly. And that is somewhere around 28.20. So we are talking about another 18 plus 20 times 6, possibly another 200 to 228 points before we hit a big wall of resistance. That's right there. That would be a perfect, not quite, it is a V shape, but it's a more of a slanted V shape move. And they have a big downtrend line right there. And these things are very critical because this tells us whether or not the market's going to go into that enhanced volatility stage, i.e. have a substantial short-term pullback before it attempts to again attack this wall going back to October 2017. This affects the entire market, And of course, individual stocks have their own characteristics. Some of them, they don't always follow the market. We know that. And but in general, the larger cap stocks, the Boeings of the world, the Apples of the world, and all those type of stocks, the Caterpillars and this and that we trade effectively, they are going to be directly affected by what the S&P 500, in this particular case, we're talking about the futures market, which is the proxy for the S&P 500, the dynamics behind the S&P 500 and the traders market. So we're talking about another 200 to 228 Dow Jones Industrial Average point on approximately that we have, which would bring us back towards the low 26,000 level on the Dow Jones Industrial Average, which again should be a formidable resistance. So saying all that, one second, I just lost my chain of thought. Okay, so saying all that, this is where we are right now. So if you take a quick glance on what is going on, and I'm going to zoom in a little bit more, you can see that overall on the daily charts, I haven't even shown you guys the weekly charts, on the daily charts, regardless of what the media says, regardless of what intraday the market pulls back, then pulls up again, ferocious short-term short covering and buy programs in the last hour. You guys saw all that stuff today. Even though it was net a down day, you could see where the waves of the buying and selling were coming from, and those are very, very precisely presented to all of you on the short-term 15-minute, 1-hour charts. You can clearly see the green candle formations and such. This is the daily chart showing you more of the bigger picture. I don't need to remind people of that. So the key is that regardless of that, you can see here clearly that the overall uptrend is very much intact. We have had, since we started this massive rally on the 26th of December 2018, let's keep a couple of real important things in mind. We have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And that includes tonight. We have had 13 red candles. We have had 13 red candles. In fact, 13 red days. It's actually 12 red days, because this candle here, which is just forming right now, is really tomorrow's action. So we have had 12 red candles since December 26th. We have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. We have had 27 green candle positive finishes, and we have had 12. We have had 12 red candles or negative finishes. Just keep things in perspective here. So more than double, in fact, a ratio of 27 by 12 is a ratio of 2 and a quarter. Almost, we have basically had more 200. We have had more than a double of positive day finishes. And the reason I'm mentioning this thing is a very simple exercise in behavioral psychology, behavioral finance, because even though we have had 27 up days and 12 down days since December 26th, since this massive reflex bounce started, every single day you hear the media, the financial media, you hear the analysts, you hear yourself in your heads feeling that the market cannot go higher. It's a fact. So this is the way, and the primary reason behind this, and this is very important for all of you, whether you are a beginner, whether you're an intermediate, whether you're an advanced trader, to keep in mind that the volatility intraday is so, the structured volatility, I should say, the up and down, as Jackal likes to say, the yo-yo, right, of the market, the waves of buying and selling every hour, every 15 minutes that the machines are manipulating, the algorithmic high frequency trading, algo HFT black boxes are doing, makes sure that human retail traders have a very difficult time keeping their brains and their emotions in control, because they jostle around the movements, so you never feel that you could have 27 up days and 12 down days. And that applies to me too. Because every time you see a red candle like this, you feel, uh-oh, we're going to drop another 100 points, 200 points. Every time you see a red candle that falls out of this channel, this is the large macro channel, this one. This channel that you're looking at, this is the acceleration part. That started off pretty much around, I would say that pretty much started around, I want to take this, sometime around the 28th of January, from the 13th of January of this year, 28th of January. That's this one. That's your acceleration channel right there. Okay? And it's very possible that we could come to the bottom of the acceleration channel without doing any damage whatsoever to our uptrend. And the bottom of the acceleration channel would be somewhere around 2740, 41. That's roughly another 23. That's another 100 or 125 points on the Dow Jones Industrial Average. Create absolutely no technical trend change or real damage on the uptrend. And 1 second, there. Could easily do this before we make another move higher, because that's pretty much what we've been doing. If you look at this channel here, this one, acceleration channel, you'll see we've been doing this. But every single day, it feels like here comes the next 600 points or whatever the case may be. And we have had 200-300 point down days, and yet we have managed to bounce back. That's what this is what I talked about earlier on today on my Twitter feed, where I said these tactical pullbacks, such as today, we were down at 200 points almost, right? And or more. And then we ended the day down 100 points or so. So bottom line is that's what I mentioned earlier on, that the primary trend is higher. You can see that. This was your big one. Then you went on a sideways move. This is the angle we're going in right now. And in my opinion, we will most probably hit the upper end of this channel, the 2850 level. But before it does that, it might zigzag around, drop another 100 points or so, retest this 200-day moving average. This line is the 200-day moving average. That's around 2750. That's another 100 or 110 points below where we are right now, and then bounce from here. But one way or the other, there's a very high probability that we're going to test this massive downtrend line, which is displayed here in the form of this magenta or pink line, known as the very large macro megaphone. That's what it looks like. It's a megaphone. And at that point, we hit some serious stall speed, and we hit a brick wall. So we have a brick wall here, and we have a brick wall there. And this move here, we should capitalize on. As long as these uptrending, this blue line is a 20-day moving average, this yellow line, this orange line is a 34-day moving average, this red line is a 50-day moving average. I would stress, as long as the blue, which is the 20-day moving average, simple 20-day moving average, SMA, and these are both uptrending. They're both going higher. You see that, and the 34-day moving average, both are following this trajectory of moving higher. The 50-day, I would like it to basically make a more sharp curve higher. But as long as these two the 20 and the 34, this one and this one keep on continuing higher, we're good to go. In the meantime, the market will move within. What it always does is within a channel. So as options traders, and this is really important to us, as options traders, we have to somehow, and I know it's not always that easy, somehow, an options trading is never easy. That's why the rewards are big. Because if it was easy, then everybody would be an options traders and everybody would know what the heck's going on. But that's not the way it is in life, right? So you have to, there's some simple rules that I follow. I diversify my trades. I don't go nuts into one. I play both the day trades and the swing trades. Sometimes I don't day trade too much. I just set up the swing trades like today. And there are different ways to skin a cat. You can try to short the markets on quick technical breakdowns intraday, which you can do very well using my 15-minute and the 1-hour charts, or you can sit back and set up trades by dollar cost averaging. You bought something at 2, giving a case of the SPY calls, for example. You bought it at 2, it goes down because of a quick sharp fall to $1, to 66 cents, to 70 cents. Well, you can dollar cost average down. Once you dollar cost average down, you have a big heavy move at the end of the day. You could be profitable very nicely, or you could be close to profitable, and you could have a nice fat run up the following day or the next, or so when the market gaps open. Now, I'm not saying the market's going to gap open up tomorrow, but I'm pretty much sure that these are the March ones that we're looking at, the March 1st, which we have ample time on. That's next Friday. We should be able to get at least 1 or 2 days where we'll be blowing out of those dollar cost average, which simply means we lowered the cost basis of our option prices. We'll be able to blow them out at a very nice price. So different ways to skin a cat. You can try to be as fast as a machine and trade every red candle down, which even for me, in many cases, is almost an impossibility. Or you can look to see the technical move and also see that nothing, these are resets. I've showed that repeatedly today on my algorithmic high frequency trading chart. I kept on showing that this was a technical reset. Here it is. Right there. Let me try to make this bigger. That's better. So basically, here we are. We were overbought, and then we had this consistent selling in the form of these red candles, back and forth, but still, this dotted line is your pivot. Once you lose pivot, you could, it tried to go back up there, and each candle is 1 hour. So it tried to go back there at 2 o'clock. I'm sorry, 1 o'clock, 2, 3, 4, 12 o'clock, then 1, 2, 3, that was the third hour, 3 to 4. Yeah. So you can clearly see here that if you looked at this chart and looked at it from a mechanical technical view and not just get your brain mushed up by the volatility moves on individual prices, you're going to see very clearly that we are in a box. And that is right there. And all that box did was this large move higher. You can see that. That's very nice. This chart is very nicely drawn, as you can tell. Right there. So we went up like this. And all we're doing for the last 3 days, or since the 14th, since Valentine's Day, is basically we're moving sideways. Now that sideways move is large in the sense that it's triple digits. Not that large, but it is large. Triple digits, and this was today. So from an algorithmic standpoint, from a mathematical standpoint, it makes sense that now we almost touched the bottom end of this box or the major support level, and this thing has started to bottom. This is a key indicator. That's why I have these markers there. Very easy to follow. I try to make this as simple as possible for non-technical traders, because I really don't need to mark these charts. People who are my advanced coaching students, people who are technical traders, who are tactical traders, they can easily read this without my markers. Once you get the slow stows, what we call S-stock, for newer members, just know this stuff, the S-stock, short for slow stochastics, which is the second derivative, a first cousin or derivative of the relative strength index. showing you underlying strength in the market. You can look up the definitions on this on Investopedia or just Google the financial definition. When the slow starts gets overbought, markets get those big rallies. Once they get overbought, they can last for a day or so, then they reset. It's waves of action. It went up for 2 days or a day and a half. It stayed overbought, then reset. Each of these resets, and that's what I want to highlight today. These simple things can save you a lot of money, help you not panic, help you set up the trades and dollar cost average within reason. And even though you don't feel too good that particular day, and I've shown this hundreds of times, and then you have those kaboom, massive opens, which in my opinion, there's a macro catalyst in the picture, which you all know, which is upcoming trade announcement. It was just announced right now. I just saw it on Bloomberg TV that President Trump is going to be meeting the Chinese Vice Premier, Li Hua. I think I got that right this time. Tomorrow at 2:30 p.m. So, I mean, these are positive developments. He's meeting the Chinese Vice Premier, who's been talking to high-level trade team delegates, U.S. delegates here in Washington, D.C., and in my opinion, that's overall a positive. So a quick, nice pullback that we saw today and the rush into buying in the past hour all fits in within the model of what algos do, which is reset, i.e. take some profits, lighten the mood a little bit, scare the living daylights out of individual human retail emotional traders, and then we pick up some nice prices and we get a nice move higher, which, like I said, we probably got about 200, 250 points before the market really tops. All right. So we're not talking about like, another 500, 600 point rally. Hey, it can certainly happen, but I'm just saying this is the way these models work. Algos are designed, as I've always said, to make sure that 90% plus of human retail traders are out of their positions before they take off. All of you who have been with me can attest to that repeatedly. The point of maximum fear on a minor technical tactical pullback, such as these, in the context of a rise on an uptrend, a nice primary uptrend is higher. Every single time we have had these minor pullbacks, it has given us an opportunity, at least for now, in the context of where we are, in the context of a primary uptrend which is still higher, the primary trend which is still higher. In the context of this, every single one of these quick, sharp, these normally last 24 hours or so. You can see that. They don't last days and days, these quick tactical pullbacks. Every one of them, where the slow stochastics have reset from overbought to oversold. This has not fully reset, but it's pretty much there. You can see that. Every one of these pullbacks, I repeat, have given us a chance to set up some nice trades so that when this happens to the upper end of this box, which is at that 279, 280 level, that's why we have the strikes on March 1st for 280 calls, which I believe my lowest buy as I was cost averaging down was somewhere in the 60-cent level. So I've really brought my cost down from $1 and change down to here. Every one of them, when it does this before it pulls back again, who knows? It might break out, but I don't know. But generally, if we're going to trade within this box, which we've been doing since the 15th, this allows you to set up that trade and have that kaboom moment where you sell as the market surges forward. This could very well happen tomorrow. Not at the open. Who knows? I'd love to see a 20 handle futures open higher. I'll be selling like a monster right off the bat before I figure out and then re-enter again. Now, as I was saying, every single time you get these minor tactical pullbacks, the algos and the algorithmic high frequency trading black box programs get very active, and they want to make sure that almost no or the majority of retail emotional traders are not there, that they freak out, they sell for a loss, They're not obviously following my charts. Whatever the case, they want to make sure that the train is empty before it bullets higher. And then everybody tries, not everybody, but some of you try to get into a running train, which is fine, but try jumping onto a fast-moving bullet train like these markets are. You're going to fall right on the track, probably chop your legs off. Okay? Well, figuratively speaking, chop your positions off. All right? So that's it. Now, if somebody wants a full guarantee, there ain't no guarantees in trading. There are high probability and there's low probability. And it's a pretty good high probability that even if we slip and slide a little bit lower tomorrow at the open, I don't know, we are in this oversold zone where I have this lovely marker where the markets will, within 24 to 48 hours, again bounce. And that would be within the context of this bull flag consolidation channel with a major support level of around this level, which I've pointed out. That's why I have those arrows here. And if it breaks that, then the next support level comes in, which is around here. And this drop is good for 200 plus points on the Dow. And I will certainly buy SPY puts on that matter. Whichever the case, it is still, since the first week in February, you can see here very clearly, this is what we are doing. And that, in any word form, anybody with some eyes that they can see, is a flag. That's a bull flag. This is a powerful bull flag when it points up. This is a bull flag when it consolidates and there's profit taking, such as here. So that's why I keep on saying, just for you who are not that technically adept, when I keep on saying another bull flag. Technicals guide you to a high degree of precision, but that doesn't mean that you shouldn't have reserved the right to get out of a position, take a mini loss or a loss, or go short, and that's completely up to you. But these are extremely precise charts, specifically on the quad system, which uses the bar chart format. And like I've always said, anyone interested in subscribing to this, I do. I've been doing for years and years. Let me know. I'll send you the link. You should do it because it's pretty simple stuff, actually. And once you train your eyes to look at it, you don't freak out as much when you're looking at your own charts, whatever you're looking at, and you're looking at the market when it was down 175, 180, 190 points. Because these candles are very visible and they give me a clear idea. My levels are put in place. And the other thing that the market did, we had a massive breakout, right? And that breakout was on the 15th of February. You can see that, right? Gentlemen, ladies. Well, guess what the market did? The market came back and tried to retest that breakout. That's just the way it works. This is a W-shaped breakout. This is a dragon bullish breakout right there. All right? And this one also was very volatile. We played it. In hindsight, it doesn't look it, but in the middle of it, you guys were all grabbing diapers. Most of you. So, and you can see that right there. Heavy volatility, hundreds of points. But it broke out right there. Right there. And then now we are back in the box doing this stuff and we're just retesting it. If we break that, then it's possible that we fall in this zone, which is right here. We'll see. Some sort of negative comment or some sort of not cordial comments, at 2:30 p.m. tomorrow between Li Hua, the Chinese vice premier, or Donald not saying something happy, not that constructive. Markets will freak out and will drop 200-300 points fast. So we have to be very, very cognizant about this. But this is where we are technically. Okay, so I explained that chart very thoroughly. This is very important to me. It has worked for me almost 90% of the time. When we get deep oversold, and like I warned, we are not deep oversold. We are oversold. Same pattern as this. And once this crosses over and starts to move, things move fast. The candles get bigger, they get greener, and you are making that 20, 30, 40% within an hour or two on the SPY calls. Similarly, when you're overbought, again, it looked like it was going to go sideways, but still, when you get overbought at this level, you could each of these candles are good for about 10, 20, 30% on an hourly basis, especially the big ones. You know that. Okay. Now let's take a look at this one. This is so you guys can understand what I'm looking at. This is one, I'll construct new charts to guide my members. I said, and this is as perfect as you can get. You can. All right. This is where we were on the 15th. What day was the 15th? The 15th was last Friday. This is where we were last Friday. We had a ferocious rally that we participated in. And then we moved into this sideways box. And then we had a ferocious rally on the 20th. What day was the 20th? Which was yesterday. Okay? Powerful. No, this was 9 o'clock in the evening. This was after the market closed. The market closed yesterday at 1 o'clock, 2 o'clock, 3, 4. There. Now keep this in mind, because this is how you become a real trader, all right? And I'm sure all of you want to be real traders, not like, wishy-washy, yo-yo, kind of softy traders. You want to be a real trader. You got to train your mind towards it. You got to train your eyes towards it. You got to train your brains to look at markets in a mechanical way, and it makes you more money. That's really what it is. You don't do that to make yourself, oh, I'm a real technical trader. Is that great? What does it do for you? Well, it overall makes you more money. That's the reason why we do what we do. So there we go. So we closed here yesterday. Everything looks good. Yesterday, 4 p.m. This was in the middle of the night. I saw the futures by 10:30. They were up all the way here. We were above 2,800 on the S&P 500 if the market was open. We were at 27.98. I mean, look at these two candles. That was around what time? That was at around 10 o'clock last night, after hours. Then, all of a sudden, there's some consistent. These are all, if you notice how systematic this is, those are systematic programmatic selling in the Globex futures for different reasons. All right? So I'm not getting into the reasons behind it or anything like that, but that's just the way it happened. So when that happened, the shorts got trapped with this huge move. This is after 10 p.m. last night. And then this programmatic selling came in, so the bulls got shorted. Again, this is not during trading hours. This is after 10 o'clock last night. And then the market went into this is 7 a.m. this morning. This was 9 a.m. this morning, right when the market opened. This was 10 o'clock today. So we had this. So the market pretty much opened here, went lower. I immediately put up this Fibonacci retracement. The simplest thing about a Fibonacci retracement is, generally speaking, when you get a large move, this is a large move, okay? In between volatility, this is a very large move on the market. From the low 2700s to this was a 70-point move from to 2798, where it reached around 10 o'clock last night, Eastern Standard Time, to where we were, 2728, on the 15th of December, of just last Friday. This was where we were last Friday at around 2 a.m. Again, after, pre-market, 2 a.m. Eastern Time, 3 a.m. Eastern Time, before the market opened. It's a very large move. It's a 70-handle move from here to here. You see that. So 70 times 6, it's roughly about 400-plus move on the Dow from here to here. So once you get that, anytime you have a large impulse rally over a matter of a couple of days, or even sometimes during a day, but over a couple of days, you are going to see a pullback. And that pullback generally is capped at the 50% level, 50% Fibonacci level. I've shown this many, many times. Is it 100% accurate? No. Is it at least 60% to 70% accurate? Yes. And that is exactly what the market did. It's mind-boggling. Here, this dotted line is your 50 Fib, 0.5, 50, 27, 63, 74. Look what the market did. You can't make these things up. This happened at 3 p.m. today. Right there, at 3 p.m. today. this afternoon. It retested twice that level, almost that level, give or take a point. That's good enough. Once at 2 p.m., right there, once between 3 and 4. And this is where we ended up at the end of the day. Massive rally. See that? That is a powerful short covering rally. What I'm getting at is if the 50 fib holds, this 50 Fibonacci level holds, then we should have a reflex bounce that should take us up towards at least this downtrend line. This is the first downtrend line, 2778. That's only 5 points higher from here. 5 S&P points higher from here. And this one is your downtrend line, the other downtrend line. And that is around 2787. That means the market could go up another 1410, another 100 points or so before it hits the next resistance point. Now, this is also for technical traders who understand patterns. I've asked everybody to review my pattern videos, and of course, go on Google and listen to these guys who have 1 million, viewers on explaining basic technical patterns. So you guys need to know this. I can't be teaching kindergarten, but that stuff you got to know. Just got to know. This is a head and shoulder. Head, short term. Head, left shoulder, right shoulder, which also happens to be the downtrend line. So as this approaches the downtrend line here, it also approaches the right shoulder. Remember, a head and shoulder looks like this. Is a bearish pattern, short-term bearish pattern, or it can be a long-term bearish pattern. Here's your head right there. Here's your left shoulder. Here's your right shoulder. Once it hits that, it's possible it pulls back. This is your neckline. So if this is the head and shoulder, this is the large neckline, which also happens to be the 50 fib. Or you can draw this as a neckline right here. See that? Look. So once you basically get into that shoulder zone, then you got to watch out if we hold this. Specifically for me, you got to watch out if we hold this level. If we don't, then we're going to tumble. We're going to tumble. And you can go short. You can minimize your long positions. And this is another thing I was going to say earlier. Keep your position sizes smaller. Diversify into different types of stocks that I'm showing. Don't always have to be sticking to one that you always made some money on. Oh, I'm just going to be playing that. It doesn't work like that. Okay? Stocks don't know you. And you don't have to fall in love with one stock. Just remember that. That's the biggest mistake that retail traders do. They fall in love with one stock. Like, oh, that stock. It's good to know stocks so you can trade them and you'll understand their characteristics and the options and such. You don't have to fall in love with anything. None of when we brought out PCG, which has been a humongous winner from like $10, $11, $12, they have stock almost hitting 20. Pacific Gas and Electric. None of you ever traded Pacific Gas and Electric. I didn't. And those lottos just exploded. In the midst of today, the cheapest lotto, the 20 March calls were up 130% at one point. From like 30 cents, they were up to like $1.30. They were up like almost 300% from the time that we bought it. I don't even keep track of that. They were 60 cents yesterday. They went to $1.35. Right there is 100% plus. And I believe when I recommended this about a week ago, when PCG was moving very nicely, that Pacific Gas and Electric still has room to move. But the big move, I think, in the short term is over. Once it approaches the 2021 level, please feel free to review the charts. The calls were like 30 cents or 20 cents. 30 cents, I think. That's big. Hold on. And that's a classic swing trade, the PCG, excuse me, the PCG trade, because all you had to do was just buy it, follow the chart, buy it, follow the chart by a little dip, buy it, and then kaboom. It goes up a little bit. It doesn't go up 500% plus, right? So some of those other crazy calls, some of the other smaller ones, this one just moves steadily, 35%, 35%, 35, 40, 50% every day. Serious, sometimes I wish I could have put a lot more in there. Think about it. But these chances come. So always diversify, always keep position sizes reasonably small to moderate. When markets get really choppy, minimize positions. If you have 4 contracts of something, whatever, Bring it down. Keep it at 2. So what does that do? That minimizes volatility during the day. You're up on something really nice, take the whole goddamn thing out. All right? Or if you have 3 contracts, keep 1. So that when those reversals come between 3 and 4, you're not like, oh God, I just sold it. What do I do now? You know, the atypical trader remorse. Remember, the pain of sacrifice, which is the pain of setting up trades on quick tactical pullbacks that I talked about the first part of this session, is far smaller than the pain of regret. Or saying it otherwise, the pain, opposite way, the pain of regret of not being in a position when the markets gap open and run, and stocks gap open and run, and you're not there. And that is the case with most of you. That is the case with 99% of retail human traders. And it's happened to me too. But I am far more disciplined and I'm always in. Small or not, I'm in. So the bottom line is the pain of regret, of remorse, of not making what you should have made is far worse than the pain of sacrifice, technically speaking, setting up trades on quick tactical pullbacks as long as the ranges and all that other stuff is fine. Think about that for a minute. It'll just help you guys. I'm trying to help you guys. That's all I try to do. Okay? For the few bucks that you guys put in my pocket every month, amount of help that you get, better on a technical, motivational, and the psychological perspective is limitless, is invaluable. Trust me. All right? I have to say it. So saying all that, that's it. So here's your border. You don't want to cross this line. It can, it can dip down, retest it again, but we want to make sure that the 50 Fibonacci, which also happens to be this large inverse head and shoulder or cup breakout, it can also be a cup right there that happened with a punch. That's known as a breadth thrust. Look it up too. All right? A powerful move which jettisons the market away, breaks away from a range, just the way a rocket breaks away in the atmosphere and leaves Earth atmosphere and the Earth's magnetic field by booster rockets. That's a booster rocket. Seriously. Okay? It's all physics. So this is your booster rocket takeoff, and then the market entered a different zone, and that is this. And then this little dance happened while we were sleeping. Okay? So negate that, the market's basically fine. It's within this range. So this is, if you look at it, this is obviously a bigger booster rocket or bullish engulfing candle. This one that happened between 3 and 4 could be, it looks pretty similar. A booster rocket when a lot of you just gave up. And more so other people who are not following us, who are not Crusade Trading members, they're like left in the dust. Believe me, it's always the case. So this looks like this. So all we did was we retested this massive breakout that happened on the 15th, which also happens to be the 50 Fibonacci level right there. 0.5, 50% Fibonacci, that's how you say it. It's exactly what we tested, and this is what we are. And I'm looking at the upper end of the range, which happens to be the left shoulder, right shoulder here, if it gets there, as also another level of major resistance. In the meantime, we got to deal with it. The earnings baskets, they're mixed. Some big winners, get some, and then you get a couple of losers. Overall, it's working out well for me. We have 2 massive winners after hours in the form of TTD. We have a big loser, one of them, which is Stamp. And personally speaking, Stamp calls were so frigging expensive, it probably wasn't even worth doing it. That's another way I choose. If the premiums are way too expensive and I have to buy way too much out of the money, I just don't do it. I'll put it up there if somebody wants to do it, but I wouldn't do it. If you got to pay $12, $13 on average for a call, because we're playing this mostly on the bullish level, or you can do an option spread where you can buy a call and sell a call to cover the cost and stuff like that, but that's up to anybody who's a little bit more advanced. But if you're doing buying straight calls and it will cost you an arm and a leg, and it's way out of the money, just don't do it. The stock moves, it moves. What are you going to do? So TTD, the calls were around $8, $7 to $8, $8.50. The stock is up $19 after $18 after hours. Roku took off very nicely. ACIA very nice. Boom very nice. I can't remember if I mentioned OLED. That's also up very nice. Melly's down about 3. DBX. I'm just mentioning the ER trades for tonight. Dropbox was down about $2. And those calls are damn cheap. They're like $1 and change. So even if it's down $2 and it blows out, like who cares? It's the $8-9 one that you don't want to be down at 1 or 2. In some cases, we have played the reversal trade and they've worked out great. But anyway, it doesn't feel good when you buy something at 8 and it's down to like 2. So $800 goes to $200. You're like, what the hell? But that's earnings. You got the risk trades. You got to buy the basket approach. So anyway, so that's it. So I'm going to take 1 or 2 quick questions. I just want to show this, and then we're going to wrap it up. I'm going to get some rest. 1 second. So here we are. This is a weekly chart of the S&P 500. This is your predictive swing 533 chart. Nothing more to say than the weekly chart is still showing continued strength. I'm talking about the weekly chart is showing continued strength. Markets are moving sideways in an overbought zone. This doesn't last forever. I would say another week or 2, and then the market takes a nice tumble. All right? Or maybe a week. We shall see. Like that, we are overbought on the stochastics, but if you look at this number here, this blue line is your Bollinger. These are very easy stuff, guys, so just focus a little bit. Here's your Bollinger. Upper end of the Bollinger is 2850. Didn't we talk about 2850 just at the first part of this conversation? Bingo. Bingo. All right. It's all mathematics, very precise. So 2850, see a lot of money from here, guys. Ladies and gentlemen, guys and girls. 2850 means 75 points from here. Where we closed at, we closed around 2775. So 75 more points times 6. That's 450 points. That's a lot, guys, just to reach the upper Bollinger on the weekly. And I think that's where the market tops, around that level. Short-term top. This is accelerating the MACD histogram, so that's another good sign. So that's more the bigger picture of the fact that despite intraday volatility, where the markets can go, which directly match in with what I showed you all earlier. So I'll take 1 or 2 quick questions and show a couple of charts, on stocks. That's what we do. And we can say sayonara, good night. So go ahead, guys. No stocks, no charts. Hopefully you guys are trading, Any requests? Try and see anything? No? So I'm going to just show Apple. So Apple is at a very interesting stage. I normally don't trade Apple that much, as you guys know, but I like trading it from some technical levels where I find it interesting. Well, I happen to find it interesting right here. I'm not asking for too much. Even Apple calls are cheap. You buy them at 40 cents, like the 175s, they go up to 60 cents. That's 50% on your money. All right. So what I'm looking at Apple is quite simple. This is a gap fill. This is an old chart, so I got to adjust it just a little bit. In the meantime, if anyone comes across any stock, can everyone hear me? Yes?
Yes. Yes.
Okay, that's good, because sometimes I accidentally put myself on mute. I don't know I'm talking, and then this recording goes on and there's no sound. So, okay, so if you hear me, feel free to ask me about a stock. I'll show you. So Apple, basically, I'm looking to trade this stock till about 175, 176, and that's a lot of money. See, that's the beauty about trading these stocks, because the chart might not look much. Chart said, if somebody who is not a technical trader, they'll be saying, oh, Apple has to go all the way up here. Yeah, right. Apple goes from 171 to 190. The market's going to be up a gazillion points, like 1,000 points. I'm looking to simply trade the ranges, and I'm showing you the daily. So the daily chart is pretty clean. You got a gap here, right there, and I can extend this gap. There's your gap right there, all the way back from the 26th of April of last year. Can you believe that? From April of last year, right there. And here is the gap, and I'm pulling it. Oh, come on. Now that's an old gap that was filled previously here, but I don't really care. I just use it. The upper end of the gap is here and here. So Apple could possibly, for whatever reason, trust me, that's how technicals work. You get too much fundamental analysis, you get that major disease called analysis paralysis, okay? We're analyzing everything to death and doing nothing and making no money. And that's the case with a lot of traders, a lot of institutional managers, a lot of the talking heads on TV. They're just analyzing everything to death. In life, it's all about action. You got to take action. You got to take a quantitative risk. You have to understand that your quantified risk, where your risk can be, and you got to dive in. The more you think, the more you're going to lose on trades. You know that. I don't need to tell you guys that. So saying all that, I'm just looking to trade Apple for a couple of dollars, and it's going to pay the bills. It's going to feel great because when Apple's up $2 or $3, everyone's like, "Oh, Apple, it just woke up. Look at that." Nothing. It's just basically moving between this gap here. That's all I care about. And if it breaks that, forget about it. The market's going to the moon. Because if Apple breaks around 176, 177, you got a whole move on Apple up towards the 200-day moving average at 190. That's asking a lot. Okay, so I'm not even going there. Because this is the daily chart of Apple. Apple is so far away from its 200-day moving average, it's not even funny. Apple has something going on right now, which I'm seeing for the first time, thanks to all of you. And I decided to show Apple because none of you had asked me any stock. I'll show Square in a minute. Mike asked me. So this is very interesting. You see what's going on here? Now, I've talked about this a lot. The confluence of the 20-day moving average crossing over the 50 and the 30, positive. The beginnings, you can see the beginnings of the crossover of the 34-day moving average and the 50-day moving average, very positive. So we could be in the cusp of a big fat move on Apple, which goes over 175 and busts a move. I don't care. Apple moves $1, $2, $3, my options will double. Your options will double. That's how you play. Think small, trade small and get big. That's it. Is it easy? Sometimes it is. If you set yourself up right, it's easy. If you don't, it's very hard. You know it. So this, I just noticed. This line crossing over this, extreme positive. It hasn't happened. When was the last time this happened? Roll your eyes back. The last time this happened, let me take this out. It's kind of... The last time the crossover happened was here. Was actually here, right at this gap, right there, where the 34-day moving average and the 50-day moving average crossed. What happened to Apple since then? Apple at that point was 190.86, and then Apple went to frigging $230. I'm not saying it's going to do that, but you can see what I'm talking about. So we have a crossover here. So all I'm saying that even if Apple goes up $4, you got to more than double on your money. God forbid Apple breaks above this channel. Remember, this is the channel here, right there. Then you're going to get a big move up towards the 185 level. So there you go. All right, Square. Square has always been one of my favorite stocks. I think it's a great company on the forefront of, and that's just my quick 10-second pitch on Square. So is on the forefront of all the new technologies about electronic payment systems. They also are in a way, they are a supplementary play on the Bitcoin blockchain, more like the blockchain technology that JP Morgan has now started to deploy, which is big. That's the reason why we are in Riot. OSTK is another stock, Overstock, which also uses blockchain technology in their marketplace, all kinds of stuff. So, within their technology framework. So basically, Square, again, calls are generally cheap on Square, as Mike knows and other people know. So you can basically buy a bunch of them and not, use up your whole portfolio. And so far, it's good. It is having a little bit of a pullback. No big deal. Everything looks good. Everything looks good here so far. Earnings are coming up, I believe, on the 27th. And personally speaking, I'd like the stock to pull back a little bit more before earnings. If the stock pulls back, let's say to 70, which is somewhat unlikely unless some analyst downgrades it and stuff. I love analyst downgrades right before a major earnings report, and the stock has a tactical pullback, which doesn't change anything. Remember, we've been trading Square all the way from this and lower levels, and we have played, not held it all the way through, but we have traded Square all through this. You all know that. And through this. So even if the stock comes back to the 70 level, just screaming buying opportunity. There's a bunch of things happening on a technical basis, Mike, which is your 200-day moving average is here. That's around 70.30. We have a crossover. Let me just move this line. Okay, we have a crossover at 34 and the 50, very positive. We have the 34-day moving average attempting to cross over the 200-day moving average, very positive. We have the blue line here trending higher. You don't need to be a rocket science to figure out, and has crossed over this very long-term 150-day moving average, which I think is positive. So overall, technicals are very positive. Quick pullback from the 77 down to 73, that's standard procedure. And if the stock pulls back a little bit more before earnings, I'd like it more. I still like Square. So far, pattern's good. We're not asking for the moon. Now, keep in mind, it's a pricey stock in the sense of valuation. So what generally happens is that if the stock misses by a little bit or says something like, oh, growth is slowing a little bit here and there, they will smash it. And at that point, we can buy the stock again at 66. So there's always that risk. But otherwise, it's good to go. If things go right, we're going to see the stock at 85 literally after earnings. Not after earnings, but pretty much, stock. I mean, Square doesn't go up $10, but it didn't go up 10%. So that's $7. That's a lot. Pizza. Pizza is a total swing play on a takeover. That's it. It is not a technical play. It is not, overall it's a technical play when the charts, but this is no technicals. This is just a flat, thin crust or, pizza moving sideways back and forth. We have some selling in pizza today, which I didn't like, but what do I care about? I mean, I'll buy those calls. I'll put them away. I'll keep on rolling them out till the company gets bought out. It's really as simple as that, Jack. Now, do I know if it's going to exactly get bought out? No. But do I know that Starboard Capital, which is one of the best private equity managers in the universe, okay, look them up. They have a big stake, Starwood Capital, I believe, have a big stake, or Starboard, I can't remember. They have a big stake in pizza, and you think they got into Pizza Hut to care about what the hell one analyst is downgrading or not? No, they're in the business of chopping up that baby and selling themselves up, or putting the whole company up for a sale. So yes, this happened too. Remember this happened? And this happened when? This happened on the 1st of February. What happened after that? The stock took off like a rocket. So this happened today. What will happen after that? In my opinion, will take off like a rocket. So pizza is a pure takeover play. You cannot analyze it on a pure technical basis because it is not being a technical play overall. So far, so good. If the stock falls to 37, I'll buy more because that's the floor. That's the floor. 38 is the floor. So that's my opinion on it. There was some large sellers here today. There were about 2.4 million shares. So obviously, it took a thump. Market didn't cooperate on the other side either. Restaurant stocks overall were down from what I heard. And aside for Chipotle, which went up quite a bit, it wasn't in it at this point. But that's it. So that's my opinion on pizza. It is a total swing play till the company takes some strategic alternative. They also have earnings coming out, because I don't track pizza earnings that much. Let me just verify if earnings came out or not, or will be coming out. This is not an earnings play, even though if they earnings are good. Okay, so next earnings release is February 26th after the market. That's next week. So again, my personal opinion is that 38 is the floor. If it breaks 38, then obviously that's a different ball game. But that's the floor. And now that expectations are so low on the company that even a slight earnings beat will jettison the stock higher. On top of that, you got the smartest minds in the world, the private equity guys in there making all kinds of structured deals and stuff, possibly sniffing out a sale of the company. That's why they're in there. They're not there to eat pizza and get fat. All right. I mean, overall, just saying. But they're there to make money. So I'll go with them any day. Okay. That's it. All right, guys. It's 10:14 and hour long. Hey, at least we kept it within an hour. Hope everyone's doing well. Like I said, these are the markets we teach you to be a real trader. Go through my real-time Twitter feed if you have time during the day, to go through at the end of the day. When you have time, you're sitting there, spend 15, 20 minutes. You'll learn more about the stock market than you will ever do in your life. And all because you're a member of Clueless Ape Trading. And whether you're actively trading or not, doesn't matter. You want to learn as quickly as possible, apply those principles, make some money, and then move on. So, and make more. In between, you'll take some losses. Like I always said, I'll say it again. Do not personalize your losses. That's the deadliest mental game ever. Thirdly, just going through my Twitter feed at the end of the day will teach you the whole sequence of how markets work, my comments and everything included. And I promise you, that thing I can promise, you will be far more knowledgeable. And nothing is better being a knowledgeable tactical trader than being a emotional, price-chasing, media-watching, and all other services that you guys follow or things you look at and listening to all the talking heads who have no frigging idea what they're doing. And more importantly, either they're too bearish or they're too bullish. We have a bullish bias with a tactical bearish outlook on pullbacks and such. That's the way you want to be. You do not want to be a crazy bull. You don't want to be a dogmatic bear. And you want to keep an eye on the bigger picture while you trade the short-term picture. On that note, have a great evening, ladies and gentlemen. God bless you all. Tilray, just go look at my chart. Stocks, I'll try to look up Tilray while you're out there. Tilray, this chart doesn't do any justice. Drew, just pull up my charts on Tilray from this today. I have 3 charts in there. Clearly show where the stocks are going. That's exactly what they're doing. You can trade Tilray for 3 or 4 points, or you can hold it and wait for the stock to go to 90 plus. So that's completely up to you. All right. On that note, have a great evening. God bless you all.